Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's best stock picks. And well, September 30th, 2020, the first presidential debate is in the books and did absolutely nothing to make the market feel good about itself. It looked like two 5-year-olds going back and forth, not to be political or anything like that, but it was hard to watch. Hard to watch, and more importantly for us as traders, it did absolutely nothing to make the market feel conviction. I will tell you this. Whether you dig deep into what's going on behind the scenes or not, the market does not like uncertainty. The futures are kind of all over the board right now. They were down much bigger this morning, bouncing a little bit right now, but I kind of think that's noise. Nothing really has changed. So we're looking at a lower opening as of right now, a few hours before the market opens. But here's the big thing to keep an eye on. The market had a bullish gap on Monday and a pretty solid bullish gap on Monday. Yesterday, we had some selling in the afternoon, and in the boot camp, we actually kind of qualified that as the pause or the pullback filling the bullish gap, and it really didn't even fill the entire gap. So we're going to get a little bit more of that today, but we can't ignore the bullish gap. So we're looking actually for the market to bottom out on today's open and then look for some opportunities to buy. So we have stocks on both the long and the short side of the market, but I want to be very clear about this. If you're finding yourself struggling right now, if you're finding yourself getting stopped out or not finding good ideas, first thing I want to say, something that my old mentor used to say to me is, if it's hard to find, it's not there. So if you're really struggling to be like, wow, I can't wait to be in that trade, that's because there's nothing obvious. I shouldn't say nothing. There's very few ideas right now where you can really get in there and be like, wow, I feel really confident about that trade right now. Which, the point that I want to make, and again, I don't know why I keep pointing, is there are certain situations in the market, like August of 2020, where everything lined up and it was just, oh, let's just get long, let's keep finding a spot to buy. That's not the case right now. Right now, we have lower probability of follow through across the board. There's a lot of indecision in the market, and that means that we really need to do a good job of stock picking right now. And that's what we're going to discuss a little bit today. So I guess really, not knowing you personally, maybe some of you I do, I just can't stress this enough. If you're not sure, there's nothing wrong with being in cash. Absolutely nothing. You're better off right now reducing your share size and allocating it to those few unicorns that are out there that are good ideas, which we're going to talk about some of those probabilities today. If you're not sure, it's okay to be in cash. You have to preserve your capital as much as you want to go out and see it grow. But preserving it is a big part of trading as well. By the way, I'm doing a live training tonight. If you'd like to join me, click down the link below and register for the webinar. I'm going to be teaching the New York method in a lot of detail. So if you're kind of getting the pieces here and you want the whole thing, I'd strongly recommend you click down, invest about 45 minutes for me tonight, and it'll be worth your time. So let's head over to the charts. The futures are actually bouncing as we speak, but I don't really make too much of that right now. You can see we're actually much lower. We were actually down 22, I believe, 92 to, yeah, actually more than that, just a little while ago. So we're actually bouncing a little bit. I'm not making too much out of it. All it looks like right now is the market is recognizing what happened last night as lack of clarity. And the market hates lack of clarity. The market wants absolutes, and that's where conviction comes from. So that being said, we're going to take a look at some ideas that still look good regardless of what the futures are doing. And I want to actually talk about NIO. This is one of those stocks that can be very frustrating, quite honestly. It gives you these 2 days worth of price action, which our community was in that. 15 was the breakout level. And then you get a lot of this, where the stock is in your watch list all the time, pays you for the entire month in 2 days, then does nothing for 5 weeks, and then gives you a day like yesterday again. So it's back on the radar. It's back in our list. We are looking at a breakout over 21. Looks like it's right as of right now, which right now the market is still very early. Over 21 is the place that we're looking to bid. Now, what's the proper stop loss? That's the big question. If you buy this breakout, what is the proper stop loss? And what is the profit potential? Well, you can see that we're actually at or near all-time highs. We're going to open at all-time highs right now. You need to look to the left and say, what does the stock normally do? The last big move in the stock was $6. $6. Now, we're not guessing, we're not projecting. That is what the stock did. So if we're taking a breakout of 21 right now and the potential reward is $6 for the last move, how much is left in the trade? How are you setting yourself up to look for a new opportunity? Well, you might be buying the $21 breakout, but the trade actually started here at 19. This is where the recent advances. So it's already gone from 17 to 21, which is $4. So it's already gone 2/3 of what it normally does. It's 4 out of 6. I guess that's 2/3, right? Yeah. So what do? So today it's going to make an amazing stock to look for day trading opportunities as long as it's above 21. If you initiate that day trade and it continues to trade higher and closes stronger, it's probably worth holding overnight into tomorrow, but that's what the stock normally does. If it continues, you trail your stop up, but you don't look to aggressively add to the position because it's already done what it normally does if today follows through. So whole trade scenario there in NIO. So what would the stop loss be? The stop loss would be on a close below that $20 level. You have to give it to the area that is obvious. And right here, the $20 level, it got above it and failed, got above it and failed, got to it, pushed through, failed, failed, failed. So 20 is the real stop loss. So above 21 is going to be your entry price. 26 would be the, 26. 24 would be the target in this case. $6 to $7 profit potential. And again, we're giving it a little bit extra because it's relatively strong to the rest of the market right now. And a close on the daily chart below 20 would be the stop loss. So a whole trade scenario there. It's an exciting stock to trade when it's in play. Most of the time it just happens to not be in play. BYND is another one that we're going to take a look at. We had a pretty long discussion about this stock yesterday in our private community, and it looks obvious, right? It looks like it's a clear breakout, but this stock trades two things. This stock trades really strongly on news, and if there's no news, it kind of goes into hibernation. So we had more news, and we had a massive volume spike. So we have a massive volume spike at all-time highs, and the market's trading lower, and the news is out. So what would be the play here in this stock? The play in this stock is actually to move up your trailing stop loss and actually look to get taken out of this trade because it seems like the story has played itself out. They took it into all-time highs. They really shot as many news stories as they can about the stock here in September. It's got amazing relative strength compared to the rest of the market. I'm not saying to get out of the trade. I'm saying to move up your trailing stop because the odds of this stock reversing right now are pretty good. The odds are pretty good. Speaking of stocks that are reversing, Disney has news about laying off 28,000 people. That's not a good news story. Now, under normal circumstances, when a company, and this is really weird to say, but when a company lays people off, when a company cuts back on their workforce, that's seen as a positive to decrease the expenses, which will increase the profits in the short term. This is a little bit different. This is pandemic related. This is world situation related. I'm actually looking for follow through on the downside in Disney today. So if you're a bullish trader, very good chance to sit back and wait for it to become a little more obvious. If you're a little bit more of an aggressive, active trader, we're going to be looking for a situation to look to sell the stock short today for maybe 2 to 3 day period and generate a little cash flow if the stock and the story have legs to the downside. We don't want to see anybody have anything unfortunate happen, but short selling is a part of what happens in the market, and we're going to look to take advantage of that as active traders. On the other side, Zillow and Zoom, two different situations. Let's talk about Zillow first. Zillow is at or near all-time highs. Again, we're still looking for continuation today. Yesterday traded into an inside day, into an indecision candlestick, which means that nothing new happened in its pursuit of these all-time highs. So we're looking to buy today over yesterday's high in Zillow. ZM is a little bit different. ZM actually got up to that 520 level twice. Now is what we call well offered on the chart. I am actually looking for the stock to trade lower for one more full day, close on the lows, and then look to be a buyer of the stock tomorrow. So I want to be clear on that. Next, we have ENPH. The stock has populated into the community with regularity, actually, and you can see why. When this stock is in play, it's very, very active. We get these kind of moves where it's worth having in your watch list, where 3 to 5 days, it just explodes. It's easy to trade, stays above the open price, meets all of our criteria, stays well bid, and then we put it back into hibernation and wait for it to do exactly what it's doing right now, which is kissing all-time highs. Now, the problem with today's trade, very similar to a couple of trades that we called out this week and last week, DraftKings last week specifically, as we said, we need to wait for a better opportunity to get involved. So today, if it opens higher today as it's projected, we have now 67.50 to what's going to look like close to 82. That's a big move for the stock. Again, just looking to the left, 57 to 75, basically what it's doing now. So today's higher opening into all-time highs, if you're swing trading the stock, would be a situation where you're going to move your trailing stop up as the stock pushes higher and opens. Then the next trade is looking for a pause, looking for the next trade higher. So if you happen to be long the stock from lower levels and this well-bid candlestick, today would be a good time to book profits into a higher opening with the market slightly negative at this particular moment. But the next scenario will be a pretty nice one. NVIDIA actually hit our profit target yesterday. We're not looking to initiate a new trade today on this lower opening. We were looking at 540 as the level. It hit 540 as the level. It was a quick trade. It was 500 to 540. Now we want to see it well bid above 540. So we're not doing anything on today's lower opening because the reward potential for the risk we have to make up to 540 is not worth it. We want to see it well bid over 540. So mark that down. APPS. Gosh, the stock really, you need to watch this one with a weekly chart because it can be a little frustrating, but it's still holding and now well bid 2 days in a row and near the breakout level of 34. So we're looking for well bid over 34 there as well. WDC is actually an interesting one. We've been monitoring this breakout level for a while. You can see it's actually got up there and attempted to get through a few times. We called the breakout yesterday as an initial swing trade, pulled all the way back basically to our entry price. So the share size was reduced if you're managing the trade properly. A good question was brought up by Tammy yesterday in the group. It doesn't have a lot of order flow. It doesn't. So what we were very clear here is we're trading the breakout with reduced shares looking for confirmation for follow through. This is what separates a chart reader from a trader, somebody who understands how to position manage based on the quality of the idea. The quality of the order flow is not obvious, but the level that the right price was appeared to be being taken out, and we were looking to initiate a new trade if it followed through. It did not follow through, so the damage is minimal, but the upside would have been pretty nice if it did follow through. So I want to make sure that we don't mix strategies there. Next, we have Nike. Nike actually initiated a nice swing trade again yesterday. We had this swing low on the daily charts, pulled back, and now we're looking for follow through. Obviously, the all-time high is the target. The opposite side of the market, we actually have a couple of sell shorts. We have WYNN today. WYNN. This is going to be a pretty obvious chart. You can see here if we zoom it out a little bit. WYNN keeps failing at 88, pulling back now and sitting at support roughly around 70, 71. If it breaks down, you can see the next level is 48. This stock is in bearish order flow in multiple time frames. I am actually looking to short sell this stock below 70 today, depending on where it opens, but that's going to be the idea there as well. CAR and EOG also on the short side today. So there's opportunities on both sides of the market today. You just really need to be diligent in your entries and making sure you have enough reward potential to justify that trade. There's a lot to digest right now, but you know what? You signed up for this. You wanted the upside of the market, and here it is. Now you have to earn it. Now you got to put on your overalls and be like, I have to be a stock picker right now because the market's not clear, which means you need to reduce the focus that you have on only the best ideas. And I say that very clearly because when the market's obvious, everything goes up and it's easier to trade. That's not the situation right now. So you got to lower your exposure, put that capital into better ideas, and be really on top of your entries and your profit targets. If you have any questions, leave me a comment below. Definitely subscribe to the channel as well. And if you got some time tonight, join me in the webinar. The link will be below the video. Have a great day.